All right, guys, let's talk real estate. So, this is 100% going to be the longest video in this series, and I promise you will thank me at the end because there's so much information in this video that's going to help point you in the right direction in regards to your home buying journey. So, for starters, we're going to talk about the mortgage rate difference, just 2% from a 5% interest rate to a 7% interest rate, and how much money you are going to save if you're diligent in regards to your shopping for interest rates and making sure that the lender, unfortunately, is not taking advantage of you. You have to understand that this is your first time buying a home, so there's a lot of things you're not aware of, a lot of costs you're not aware of. So they're going to just go ahead and unfortunately charge you a number of fees. And because you're so emotionally attached to the property, you're going to say, yay, yes, I'm going to pay it, whatever. I don't care. I want the home, not realizing that these are fees that you can actually avoid. And that's why it's so important that you work with a qualified agent like myself that's going to walk you through this process and show you what you're actually paying for so that you don't make big financial mistakes. Now, what's also important, guys, is that most agents are not going to do this. And the reason why I do it is because I understand that real estate is a people's business. So it's extremely important that I make sure that my clients are happy at the end of this purchase, that my clients are educated during the purchase, and more importantly, they're confident about the decision making. Because if they're not happy, guess what? They're not going to refer me to friends and family. So it's extremely important that I do what I need to do to make sure that my clients are extremely educated throughout this process so that there's no gray space and there's no confusion. All right, guys. So right now we're getting ready to talk about mortgage rates. And this is extremely important that you are paying attention right now because this little minute difference of 2%, you're going to see right now, based off of the numbers, how this is going to change the financial trajectory of how much money you're going to be saving every month versus what you're paying in interest every month. Now, this is important because interest does nothing for your principal, meaning you're not gaining any equity because you're paying interest, which is the money that you're paying the bank to borrow money to live in this home. So it's extremely important that you're getting the right interest rate. And I'm going to show you based off of the numbers visually how this is so important. So let's get into it. So the first thing we're going to do is talk about a home that's $400,000, as you can see there. Then we're going to talk about a $20,000 down payment, which is 5%. We're also going to talk about a long term, which is 30 years. Now, all of this is extremely generic, conventional, basic information. $400,000 home, 5% down payment, 30-year term. Now, what we did here, and you can see right now, 5%. We're only paying 5%. That's the interest rate that we're paying on this loan. And you can see when you look to the right that your mortgage breakdown, meaning what you're paying every single month, is $2,240 a month. I want you to keep that number in your head, $2,240 a month. Because when we go up to a 7% interest rate, we're going to see what difference that is going to make on your mortgage payment. And I really hope at this point you're like, wow, I didn't realize just 2% in regards to my interest rate will make that big of a difference in my mortgage payment. So here we are, 7%. Wow. $2,700, guys. That is a $500 difference with just 2%. What can you do with an extra $500 a month? That's a car payment. You could literally, you're paying a car payment extra in interest if you're not paying attention to what you're signing or what you're agreeing to. And this is why it's so important that you work with a qualified agent like myself, because I'm going to walk you through this process and make sure that you are not getting taken advantage of by the lender. Now, $500 times 12, that's $6,000 extra dollars you are paying in interest. This is why this video is so important, and I really hope I'm opening your eyes right now on why it's so important that you are paying attention to what the lender is charging you in regards to an interest rate, because this can financially ruin you if you are not paying attention to it, guys. All right, guys. So before we go into the next topic, this is a great time to segue. I want to make sure I express this to you guys. Regardless if you use a preferred lender that I recommend over to you, or if you come with your own lender, I am going to sit down and talk to you about all of the financing charges here to make sure that you understand what you are getting yourself into. Making sure you understand your interest rate, make sure you understand all of the costs that we're getting ready to talk about right now. So let's get into this loan breakdown. So as you see here, Section A is origination charges. Those are the charges that you are paying the actual lender, whether that's Chase, Bank of America, PNC, whatever bank, a credit union, whoever it is, this is what they are charging for you to do business with them. Now, typically, this is not negotiable. Typically. Now, the reason why I'm saying typically is because it depends on who you're talking to. If they really want your business, they'll take a fee off. They'll reduce the underwriting fee, or they'll take the application fee off if they really want your business. But for the most part, when you talk to these guys, and I'm referring to the lender brokers, they're not going to change any of these fees because this is how they make their commissions. This is how they make their money. Now, that's Section A. Section B, as you can see, services you cannot shop for, things you cannot shop for. So these are the costs: appraisal, credit report. All of these things are things that you cannot shop for. This is what the lender's going to charge. These are the fees that they're going to say, hey, this is what it costs for us to do business. We got to charge you this to make sure that your credit is on point. We got to make sure that the appraisal, meaning that the property is going to come back at the right evaluation, and that we're giving you money that's going to make sense for this loan. These are things you cannot shop for. You want to make sure you're aware of that. That's Section B. Section C, as you can see, services you can shop for. So, pest inspection fees, the survey fee, the title search. These are things that you can shop for. So, if you want to do the due diligence and go shop for someone that, instead of paying the $135 for the inspection fee, the pest inspection fee to be exact, pest inspection fee. There's a big difference between the inspection fee and the pest inspection fee. If someone's willing to charge you $50, and guess what? You just saved some money. If you go find a title company, instead of paying the $12.61 that you see in front of you, and they're willing to charge you $800, you're saving money. Those costs are going to go down for you because you did the due diligence. Now, some of these services I can help you with. I can save you money. But it really depends on what you are willing to do in regards to doing the due diligence and making sure that you are making the right decision for yourself. But 100%, I will be able to help advise based off of my experience of different companies that you can work with to get these costs down lower for you. Now, moving forward to E. E is your taxes. They're gonna want some taxes, man. You already know that. So some states, some counties are gonna charge you a transfer fee to transfer those taxes. So that's something that depends on what county we're buying in the state of Georgia. Now we're getting into the prepaid taxes. This is what we're talking about with taxes. Sometimes the lender is going to require you to do 6 months. Sometimes they're going to require you to do 12 months. Every lender is different, and this is going to dramatically change what you're going to be paying in regards to your homeowner's insurance premium and or your property taxes. So this is something that unfortunately you cannot change because it depends on the lender. The next part is the escrow payments, aka what are you paying for escrow? Are you paying 2 months in advance of your homeowner's insurance, paying 2 months in advance of your property taxes? All of this is going to depend on the lender and how they want to structure things. Now, the next section is Section H, and this is very, very important. Now, I myself, I'm going to recommend you to get title insurance. That's what Section H is about. Title insurance. And what that essentially is that in the event somebody comes to you, say you buy a house, right? You buy a house today, and let's say that 5 years later, someone says that the house that you bought, my friend, was my dad's house, and I was on the will. So I am owed XYZ amount of dollars because you're sitting on a property that I own. You, my friend, will have to go through litigation court to figure that out. Now, what the title insurance is going to do is that's going to litigate all of that issues out of the window. And what that essentially means is that you're going to pay a premium. In this example is $1,017. And in the event someone was to do that, this insurance company will come in and they will pay out whoever that person is that says that they are still owed rights to this property. Now, I'm going to recommend you to do that, but it all depends on how comfortable you want to be with your property. And if you want to spend that extra $1,000 for that sense of security, it is recommended. Now, as you see, section I is pretty much the total cost of everything that you're seeing there. And then you have section J. Again, the total cost of everything that's being illustrated on all of the total closing costs. Now, what's important about J, and we talked about this earlier, is that the lender might have credit, meaning they might help you close the loan because they want you to get the loan. And all of this is extremely important that you're paying attention when you're looking at the breakdown. And again, I'm going to sit down and talk to you about each and one of these numbers and how they itemize and how they add up and how they total so that you understand exactly what you are getting yourself into, my friend. All right, guys. So wrapping up this section, at the bottom right, you see it says cash to close. Now, what you're seeing is the total dollar amount of all of the fees, all of the charges, all of the costs totaled up. And this is the dollar amount that you, my friend, need to come to the closing table in a check form so that you can close the property. In this example, it says cash to close is $16,054. So you would come to the closing table with a check of that dollar amount so that you can close on your property. I really, really hope that this video was extremely informative for you. And I really, really hope that this opens your eyes on how important it is to pay attention to each and one of the numbers, because I would hate for you to agree or sign on a dotted line to something that's going to financially hurt you, or you financially do not understand what you're getting yourself into. And for the 15th million time, it is important that you are working with a qualified agent like myself.